Thank you everyone for attending. I know it's a very busy time of year, so we very much appreciate it. And for those of you that have seen me present before, I often mention my kids as a way to introduce myself. And I've got a 7-year-old lad, Oscar, and he's recently gone through the rounds of his public speaking competition at school. And naturally, what I'm doing today, a little bit of public speaking, I've been giving him advice and things like that. And I said, mate, I've got this big presentation coming up. How do you think I should open up, talk to people? And he said, Dad, you've got to break the ice. Break the ice with a joke. So I said, mate, you got any good ones? He said, I do. I heard this one. What do you think? How do you get Pikachu onto the bus? You poke him on. Not bad. There, that's a 7-year-old. I knew he could get a laugh out of a room of advisors and stockbrokers. So that's the icebreaker. And now on to the more serious matters of what we're doing at Firetrail. So the Firetrail S3 Global Opportunities Fund was launched in November of 2021 after 2 years of research into the global equity universe and global equity investment management. Now, for those of you that know Firetrail, we've employed a high conviction, concentrated approach to investing for over 17 years, both at our time at Macquarie and over the last 5.5 years at Firetrail. Now, when we looked at the global equity landscape, we thought, how can we be unique? How can we be different? How can we monetize the opportunity, the trillions of dollars that is going to be deployed with some sort of ESG integration or overlay for the rest of our careers? This is an investment thematic that will remain with everyone in this room, and it will touch capital markets right throughout the world. Now, we looked at the existing product landscape in global equities, and what we found was many other investment managers had cottoned on to this investment thematic, and there had been an arms race to develop product in this space. And as a result, there became an over-reliance on external rating agencies for their ESG research and scores. Inevitably, what happened was those mega-cap growth names that have driven the market were assigned high scores because they have low carbon footprints, they're well-run, and they treat their staff well. So a lot of global equity funds, particularly with some sort of ESG overlay or integration, inevitably had a factor risk there and a concentration risk, particularly to mega cap growth names. Now for us, the way that ESG research is employed with a backward-looking focus is too simplistic and incorrect. Investing is all about being forward-looking rather than what has occurred in the past. And sustainability and ESG is the exact same. There was an over-reliance on outdated data, publicly scraping information off websites. What we found was that high conviction concentrated approach that we employ really suited this landscape because we could get in and understand companies forensically and determine what is the true contribution they're making to the world. Every company is on this positive change path. Where does it sit? How can we monetize this opportunity with a laser-like focus on alpha generation for clients? You do not have to own companies that are doing harmful activities for your clients to meet their investment and savings goals over the long run. With this in mind, we're looking where others aren't. We're looking for the really big opportunities. We're looking for what we categorize as the future leaders in positive change and sustainability. We are trying to uncover and identifying companies that are going to be the current leaders in positive change tomorrow. And as a result, they are going to experience valuation uplifts. Positive change opportunities are the big opportunities. Now, when it comes to positive change, we categorize companies according to one of two buckets. Are they a future leader or are they a current leader? Our portfolio will always be skewed around 2/3 to 1/3, 2/3 to future leaders. because of the significant ability that these companies have to deliver alpha over a positive change cycle, which we define as 5 years. Sustainable businesses absolutely deserve premiums, and they earn premiums in the marketplace. Research has shown that time and time again. But for us, what makes our fund unique is the S3 characteristics that we look for in every company. A sustainable business model, a company delivering sustainable earnings, so sustainability from a financial perspective, and then contributing to sustainable positive change, helping to solve some of the greatest challenges that the world faces today. It is truly an unconstrained approach. We can invest right throughout the market cap, from small, mid, large, mega cap, value and growth, identifying the best companies in both value and growth styles, but also developed markets, emerging markets, an investment universe that is 20,000 companies. And we do this with a commitment for our portfolio to have a 30% less carbon footprint than the MSCI World Index on a like-for-like basis. Today it's around 85% less. Our portfolio characteristics today represent better growth, better value, and a lower carbon footprint than the MSCI World Index. This fund is everything that investing should be. High conviction, concentrated, with a sustainable edge. Now, when I'm talking about positive change, I'm talking about it from our proprietary positive change thematics that help to ensure sufficient diversity across the UN Sustainable Development Goals. So we've recalibrated a number of them, not all of them, a number of them, into Firetrail's proprietary positive change thematics. Before you are 8 company logos, both value and growth. And typically, when I talk to an Australian audience, there's low recognition of the logos before you. But the median market cap within our portfolio today is around $30 billion US. And these are companies that exist in sectors and industries developing products that simply don't exist in Australia. Now, when I talk about our positive change thematics, they are health and well-being, innovation and equality, climate impact, and sustainable world. And we have a commitment at Firetrail to always be overweight these 4 positive change thematics relative to the index. So a company like McKesson, for example, sitting in the health and well-being positive change theme, is a pharmaceutical distribution company over in the US. A company like Micron, in innovation and equality, produces CPUs and GPUs and has benefited from the AI boom that we've experienced this year. A company like First Quantum, you won't see many copper miners in ESG or sustainable-minded funds. Copper, an absolutely vital requirement for the world to meet its decarbonisation ambitions. You talk about electric vehicles, you can't charge an EV without copper, you can't store energy without copper, you can't start the EV without copper. First Quantum, Canadian listed, you won't find it in many ESG portfolios because there's a larger carbon footprint to extract copper from the ground. We also have Darling Ingredients, sitting in our Sustainable World Positive Change thematic, produces renewable diesel and is developing capacity to deliver sustainable aviation fuel. Most US airlines have now committed to a blend of sustainable aviation fuel, 90% fossil fuel, 10% sustainable aviation fuel. Darling Ingredients, relatively insulated in terms of the food versus fuel debate, because the feedstocks they use to produce these vital transition fuels use cooking oil and animal offcuts. So this is a range of our best value and growth ideas with a sustainable edge. The fund is in active ETF. The ticker is S3GO, which means we publish the full holdings with weights, with a lag, to the ASX every quarter. Full transparency. Now I'm going to discuss in more depth one of the top 3 holdings in the fund today. I think these videos I've put together myself, believe it or not. That's the boutique edge. I hope it works.
The heat in southern Europe has been building since mid-April. Large areas are now red hot on this chart as temperatures are widely around 40 degrees. And in Sardinia and Sicily, they may even get close to the continental record of 48.8 degrees set in 2021.
Our focus on the show today, unprecedented heat waves continue to ravage Asia this year. The latest heat wave here to hit the continent set temperature records in multiple countries including India, Pakistan, Vietnam, Thailand and Singapore, as well as some cities across China.
Record-breaking heat was observed across many locations across southern and eastern Australia over the weekend and is set to continue across parts of New South Wales and Queensland in the coming days.
Can I ask what you do during a heat wave to stay cool? Come on, we're smart people. Go for a swim, yes. I heard aircon. That's right, air conditioning. Now, the air conditioning, or HVAC, heating, ventilation and air conditioning industry, is set to benefit from 3 secular tailwinds in the next 50 years. One is a focus on air quality. Every year, my wife and I, we go out to celebrate our anniversary. And cast your minds back to the bushfires in the Blue Mountains. We had a booking down at Six Head. We had to cancel because of how dire the air quality was. Well, it's not just us experiencing it in bushfires. You saw there in Europe, California, Canada, all experiencing similar scenarios. And particularly with the pandemic we've just lived through, an increasing focus on air quality. We know things are getting hotter. I just showed you a couple of clips I found on YouTube. And you know the heat bombs that have been existing in Europe, particularly in this summer. Every year seems to be record heat that is hitting the globe. And finally, regulators and fiscal stimulus package, such as the ironically named Inflation Reduction Act, contains subsidies via tax credits to the tune of $8,000 for US households to implement a more efficient system of a heat pump. And a heat pump is what we know in Australia is typically what we all have. It heats and cools our homes. So our favourite play in this space is a company named Carrier, market cap of $45 billion US dollars, up around 30% this year. Why is that the case? Well, again, speaking to value and growth, what has confounded many this year is not many people saw the AI boom, which has driven markets. Certainly less have seen that the US housing market has remained remarkably resilient, with US house prices only experiencing a peak to trough decline of around 4%. The reason being, people that have they've locked in low rates of their mortgages for 30 years, they don't want to refinance to buy a new home. So the supply of homes for sale have absolutely collapsed, and there's a focus on new builds. And new builds are installing heat pumps as a feature. So what matters for Carrier going forward? Cutting through all the noise of climate change, of increasing heat, what matters? Well, the market is growing, so we know that emerging markets, typically when a household income reaches around $10,000 US dollars, they will install a heat pump. India is around $9,000. Indonesia has recently gone through that level as well. In terms of replacement cycles, because of high energy costs, a new heat pump is typically around 30% more efficient. So both commercial and homes are upgrading their legacy systems from around 10 years ago to drive down costs, and payback periods have shortened. The decision makers, the people that are installing heat pumps, like to work with a single name, such as Carrier, and Carrier is the number 1 or number 2 player in each of its market segments. And in terms of the opportunity in Europe, you can see here how efficient heat pumps are relative to legacy oil-based or gas-based heating systems. And these are actually being outlawed by European authorities because of the very heavy carbon footprint. There are subsidies in place to now install heat pumps. Only 5% of UK households have an air conditioning unit installed. Now, I'm sure you've all seen the Ashes. It's been raining a lot, but 9 out of the last 10 summers in the UK have been the hottest on record. So Carrier trades on a next 12 months PE of around 20 times. It is trading at a 10% valuation discount to its closest peers. Our analyst expects 55% relative value upside over the course of the next 3 years for Carrier, up 30% year to date. It is the leading play on cooling and efficiency. So the Firetrail S3 Global Opportunities Fund, it is a pragmatic and unique approach to global equity investing that seeks to monetize the opportunity that exists from this structural investment thematic of sustainability. We think more pragmatically about the real impact that companies are having in terms of delivering on our positive change themes. It is the very best value and growth names that we can find in our investment universe of 20,000. There are 8 analysts within my team, 24 within the wider Firetrail business that we can draw upon for their insights in developing that forensic research that we conduct on every single holding within the portfolio. The fund is very, very different to what you typically experience from a global equity exposure via an active fund or a passive fund, and has a level of active share of 92% today. Listed on the ASX, Zenith recommended, Lonsec investment grade, and a RIA certified product as a responsible investment. It's what we describe as global equity investing with a sustainable edge. Now finally, if you have young kids like I do, we put a huge emphasis on communication and transparency. Please connect with us on LinkedIn, visit our website for more information, but equally, if you're finding it difficult to get your kids to sleep at night, we have an excellent paper on carbon capture and storage that you can read a couple of paragraphs to, and they will be out like a light till the morning. That's the Firetrail guarantee. That's the boutique edge. Thank you for your time. I'll hand it back to Mark.
Thanks, Doyle.